Hello and welcome, as it is the completion of the 18th day of June 2020. My name is Derek. This is the Money Charts channel. Like we're always, all bets, trades, and of the like, well, that's within each own risk and their own reward. I'll be taking a look at gold in this video. But before that, I'm going to show my top 10 largest physical holdings or holdings of assets and investments and talk about a stock, in particular Amazon. One that's been just going really high. One that, when it opened just before the end of the millennium in the late 90s, 97, like a buck and a half. Now over 26, which means it has went up very close to 2,000 times its value. Magnificent gains. And ever since it has left the 2008 crises, the monthly term time frame, well, it's had just a little bit of time below it here and has just kept going higher. And well, after even establishing this level of resistance in the end of 2018, it's pulled back, and all of 2019, and we have the breakout in April. Of course, the current event situation made Amazon a little bit stronger than other stocks, looking for a breakout now. But this is a stock that I pretty much think nobody owns for the most part, and pretty much nobody. I mean, there is owners of it, but there are people that think they might own it because they got an E-Trade account or something of the like. But technically speaking, it's not them who would own those funds. It's an accounts receivable. When you don't hold physical possession of these, I don't know how you actually physically own your Amazon shares. Are they on the blockchain? And even you could say, I got certificates. Even certificates are just pieces of paper. And could just imagine if, say, the president were to come out and start, or prime minister or world leaders just come out and say, words like your fiat currency. You learn what the word fiat means. When you have funds in the bank, it's good for you to know that it's not your money anymore. No, or currency. I shouldn't be using the word money because we don't back it by anything. This doesn't have a good store of value. And however, throwing that part aside, your fiat currency, when it's in the bank, you do not own it. On an accounting level, it's that of accounts receivable, AR, as I would learn in accounting class, accounts receivable, which means on demand, you can ask for it, and more times than not, they're going to give it to you, especially in computerized, like things they call like ATM machines. Of course, that doesn't mean the system's always going to work, and they might withdraw how much they're going to pay you as far as those levels, but it's accounts receivable, good things of note. So anyway, that's it with Amazon. Let's put the gold chart up. And as far as the top holdings that I own, the top 10, gold ranks number 7 for me. Physical silver is and this is valued in this, although it's valued in anything, it's all the same in that sense. It's all going to be this order right now. Of course, market conditions change this from time to time. But physical silver is most certainly my number one in top possession for pretty much any type of tangible assets. Bitcoin Cash, Litecoin, Bitcoin Theta, Tezos. Physical gold comes in 7th. Fiat currency, but a lot of it isn't mine actually because it's accounts receivable. Some of it is though. I got a $50 bill there and a $100 bill there and a bunch of 20s there. So I got some. So Dash at number 9 and Gross Coin in at number 10. So 7 cryptocurrencies, 2 in precious metals, and then fiat currency. And as it goes, of course, I'm a big fan of silver because, as I've mentioned so many times, let's put anything in a safe. And all those things can go in safes. Okay, I mean, how do I put my Adobe shares in a safe? I mean, I don't know. I know I can put my private keys to cryptocurrencies. I can put real gold and silver in a safe. And if I were forced to put such in a safe and I can't unlock it for a significant period of time, say 5 years, even 2 at this stage, or 10, I'm, especially on the 5 and 10, I'm only feeling confident with silver and gold. Cryptocurrencies, maybe it'll work out, but I know I could put my private keys in there. Well, we'd see what the value is when they get there. If I had X amount or whichever amount of coins, it's going to stay that way. Well, as far as gold on the charts, these Fibonacci lines I've had in for quite some time. And it came up to this 76.4% Fibonacci level from the $1,900 highs almost a decade ago, and the lows that came there after that are barely over north of 1,000. So since that retracement, It had a nice little embarkture. I don't think we'll see it in the daily, but the 1321 mark. We'll see a lot of it. There's resistance, resistance, resistance. And then after this higher low that occurred in here in May of last year, breaking it right to key resistance, pullback. And then we break it, key resistance, pullback. And then to the key resistance. No, now it's been key support. So since it's gotten above this level on April the 13th, or for 2 months now, this 16 and 3/5 level, 1670 area, has been support. And then we look at the low on June the 5th. The low just happens to be 1671 basically. 1670.88. So pretty much an exact hit. To me, that is just crazy. So support obviously established at the key level. Resistance is in at like 1743. All it has done the last little bit is hang in there, showing how do I say? It's just hanging in the 18 of highs, but grinding lower. Really no major attempt to break out or break down any time in the last little bit. We take a look at this on a more long-term time frame. First, the monthly chart. And there's all this resistance that it had amongst, even on its way down, it was having a big battle with the 1320 handle. Nice little inverted-ish head and shoulders. You can say this little area is the left shoulder, headish in the area here, and the right shoulder here. But regardless, it had so many resistance hit. And the more often you break key, or you test key levels, the more often you are like to break it, which of course was the case in here. And many, many tests it was. And at the stage in here, it's had a little bit of resistance here. We can see like 1, 2, 3, 4 candles or so just going sideways and the breakout. Nice 2 major volatile periods in February and March this year. And then now again, it's gotten above it. So the next key target level is in at like 1900, which is previous high. Let's take a look at the quarterly chart. And within such, we can take a look at the data going back to the lows here in 1976 at $98 or 100. And even before them was like 35. And well, even way, way, way before then, back in like 1932. Oh yeah, what, we're making gold illegal and confiscating, turn it in, $20 an ounce, turn it in. And well, those who played by the rules, well, they lost a lot of investment value, their portfolios. They got screwed over because once that was the case, they pegged gold from 20 to 35 basically. It is what it was, and as it is now, a situation with the obvious world events that we're going through. And in such, the world events started right, well, basically, I guess you can say it's been these candles in here. But gold probably going to have a very good chance, I think, of not only doing well here on a bullish level at this resistance, meaning if it is resistance for not much, I call that weak resistance, but significant breaks above those levels. And when these things fly, we can see what happened in here. This was just like 100 to 850. 8.5 times this thing went in a relatively short period of time. And consistently for a decade plus, or about a decade, a consistent move that got itself above the 18 average of highs. It had an attempt to get above it here. That obviously failed. Then this little attempt, if you really call it that, not really because you're in retracement mode from this low to this high, and it really never did have any type of pure break, but even in retracement mode, not so much. Now this one, of course, succeeded to get above, and so far so good, and so far this attempt in succeeding. So when you're early upon a break of the 18 average like this, well, you could have like one of these things happen, something like this. We could have a vertical up, or maybe not like that, but vertical up like that, vertical up in this nature. Or this would be a failed breakout. And I don't think that's going to be the case. I mean, it sure might be. But I think most of the failed breakouts that we're going to see are going to be looking at things like the daily time and hourly and maybe a weekly chart for the odd one here and there. But as far as the long-term analysis, I think this thing is ready to go. And the yearly chart, to me, is just one of the most fascinating ones that, as I see it, I only have so much data, but I got enough to show what I need to. As I can see within this high that the price action made it in correctionary phase and it held and stayed within the 18. Yes, it dipped below it, but that was more of a failed breakdown. And oftentimes from a failed move in one direction comes, and boy, was this a fast move in the opposite direction. And this is like every single year you can see green candle up. And from that move, and that was like, yeah, every year was up, like from 2001, I think it was, or 2000, from 2000 even. Yeah, this is 99 or 2001. So every single year was a green candle. And then 3 straight down years in a row. And within this retracement, it's been holding and staying within the 18 average of highs. But as I'm looking at this right now for this year, 2020, I like to use the term exitation, meaning you're leaving a like the correctionary phase. Thus, to me, this looks like it's... I hate to use the word sure shots because to me, they're other than the laws of nature, the laws of physics, and the laws of gravity. And even on 9/11/2001, the laws of physics, according to the official story, didn't play out. But that's what I'm going to go by. Anyway, the likelihood, of course, of this having like significantly big breaks in the next 4 to 44 months, I think, is magnificent. I like to use terms like 4 to 44 months because, how long is it going to take for this to happen? Well, it could be damn fast. Maybe by the end of the summer, things are going to be in OMG type of situations. And this is the first time in a long time I can really say 4 months because back in 2016, 17, 18, 19, it's like, gold and silver? Yeah, of course you're going to want to have it. And fiat currency, I mean, it's just, bleh, I don't like it. At least as far as long-term holdings, I don't like it. I'd rather have other things when I say I don't like it. That's the best way of putting it. But at least I would have said then, I mean, there's no panic, no rush at this stage to get into gold and silver because there's no signs of it breaking it anytime soon. Well, that was 2019, 18, 17, 16. That's not 2020. So therefore, with everything going on and this breakout positioning that I see on the chart, I wouldn't be surprised if as we go like 40, 50, 60 months from now again, that this thing could go off. And maybe it does take a few years or a few months. I don't know. But I'd be extremely surprised if within the next 50 months, this price doesn't even get to 3, 4, 5 grand kind of deal. And I think there's going to be a final price to that of like almost real surviving asset against the dollar. When historians look back, say 100 years from now, even 20, 30 years from now, what was the final price of gold with the US dollar when they had that? And then they'll have information of when and the price that it got to, what the charts that it looked like. And they'll show all this data, but they'll also show the data that happens post June the 18th, 2020. Thank you for tuning in. Have yourself a great day. Bye-bye.